don't know if we'll ever see it in Texas, but it is being used across the world in several countries, especially in Eastern Europe, where they're very afraid of Russian tampering in their elections.
Yeah.
So the ability to confidentially cast a vote and then to use your private key to verify that your vote was cast for the person that you intended to cast it for is a pretty powerful thing.
Hey y'all, welcome back to Season 2 of the Texas Forward podcast. We are excited to introduce you to Lee Bratcher. Lee is the president and founder of the Texas Blockchain Council, which has helped spearhead 2 pieces of blockchain legislation that were passed in the 87th legislature session and signed into law. Lee holds a Ph.D. in political science and international affairs from the University of Texas. Before diving into the world of blockchain, he was shaping young minds as a political science professor at Dallas Baptist University, where he taught courses on international relations and, you guessed it, blockchain. Today, Brian and Lee are about to dive deep into the blockchain rabbit hole. We're talking about the pitfalls of fiat currency and how Bitcoin could potentially come to the rescue. Plus, we'll take a worldwide tour of how different countries are approaching central bank digital currencies. They'll also discuss the environmental impact of Bitcoin mining in Texas and its surprising role in supporting the electric grid. Thank you so much for listening. If you enjoy our podcast, please share it with a friend. And as always, don't forget to like and subscribe.
Hey, everybody. Welcome to another episode of the Texas Forward podcast. I'm your host, Brian Lee, and I'm here with another Lee Bratcher. Welcome.
Brian, thanks for having me. Looking forward to the conversation.
Absolutely. Likewise. So since we're talking Lees here, I have another Lee that I would like to give a quick shout out to. So my mother, Karen Lee, she does listen to this podcast on occasion, or she tells me that she does. How would you explain? Now, just to give you some context, she has a vague idea what Bitcoin is, but I mean, she really doesn't. She knows it exists. She hears the word thrown around, and I bet she probably doesn't even have the slightest. She knows even less about blockchain in general. So, how would you explain to someone like my mother, Karen Lee, or just any lay person who doesn't quite understand what blockchain, cryptocurrency, what all the fuss is about, and why it's important, why it matters?
Sure. Yeah, Bitcoin was the first, right? With the publication of the Bitcoin white paper in 2008, Bitcoin started in 2009 with first transactions. It is essentially a decentralized, permissionless, uncensorable form of money. It is very much in the Austrian economics vein of hard money, in that there is a hard cap. And so we often refer to it as digital gold. It moves at the speed and on the rails of the internet, but it behaves a little bit like gold in that it is scarce and finite. Has a lot of properties of money. It's divisible, it's durable, and of course, we do see it being used from time to time as a store of value and a unit of account. Although with the current volatility in Bitcoin, it's not. It has no it doesn't hold a candle to the U.S. dollar. U.S. dollar, we hope, remains the world's reserve currency for many decades for all of our sake. But Bitcoin is a good asset, like gold or real estate, in the meantime, and we can use it for a lot of different things. Blockchain is a broader term than Bitcoin. Blockchains are just decentralized digital ledgers.
Okay.
And so, anytime you can think of a blockchain as the next iteration of double entry accounting. Double entry accounting was invented 500 years ago by Luca Pacioli in the Renaissance to help people transmit goods and services and payments over time and space. And we've been using it with great effect ever since. And so blockchains are just another way and another iteration of that. Allows us to do that without a central intermediary, without, in the Medici area, it would have been bankers were serving as judge, jury, and executioner. They were the bank, the accountant, the lender, all of those things all wrapped up into one. And so blockchains are sort of a digital form of that kind of ledger technology.
Interesting. And, I think everyone living in America can probably understand on a pretty basic level, what inflation is, what's happening to our currency right now, and kind of how the banking system at large is responsible for, those large fluctuations we see in the value of our currency. So that was pretty good. I'll have to check with Karen on that and see what she has to say. I'll get back to you on whether or not that made it click for her. But
it really doesn't click for people unless you've spent an hour or two reading about it. It's not something that really you can communicate over just a quick soundbite, but something that has helped people sort of pique their curiosity is this idea that we are using payment systems that were designed, in the mid 20th century on technology and software that is designed in the last couple of years. And so our payments infrastructure is woefully behind, and that is something that blockchain can certainly revolutionize. Okay.
So you are the president and the founder of the Texas Blockchain Council, as we see behind you. Tell us, our listeners, a little bit more about that. Why did you get involved with this, and kind of where does that passion obviously come from, and what are you doing there with the Texas Blockchain Council?
Yeah, I was a political science professor before, and my research area was blockchain and property rights. So how do you improve people's property rights, particularly in the developing world, such that they feel more secure in investing in their property and their assets, so that the human flourishing of those communities can improve. And I really came across blockchain and Bitcoin at that time. It was 2015. I was actually studying up at the Army War College. I'm a Army Reserve officer as well. And I thought, this is the thing that I want to study and commit a great deal of my career to. And then after a few years, I started the Texas Blockchain Council. That was in 2019, sort of as a way to galvanize and organize the different communities and companies that I was getting to know in the blockchain space. There was a huge disconnect between the blockchain crypto ecosystem and elected officials and policymakers.
Sure.
The ecosystem was very rough around the edges, and it was rubbing the traditional policymakers and regulators the wrong way. Sometimes we still do, but we're much better at it than we were 5 years ago.
Yeah.
And that's really what prompted me to start the council. And it became, we're a nonprofit trade association. So we're a 501c6, which means we can get involved in politics. But donations, we don't really do donations, right? C3s do donations, we do memberships. So we're like a trade association or your local chamber of commerce.
I see. So ultimately, you're bringing the community together. You're bringing the thought leaders and leaders in general together under one umbrella here. And it sounds like, so are you primarily focused on advocating for policy, and what does that look like exactly?
Yeah, we do two things primarily. One is we do the traditional Chamber of Commerce type thing for our member companies. We have over 100 corporate members, several hundred individuals, and we help them with their business development work, getting connected to amplifying their brand with media connections or connecting with potential clients or employees, things like that. The other thing we do is the policy and advocacy work. We we do everything from education to advocacy to lobbying, and we work on bills, work to influence the passage of bills that would bring Texas more towards the center of the universe as far as blockchain, Bitcoin, and digital assets. And we've got some wins under our belt. In the 87th session in Texas, we helped to research and advocate for two pieces of legislation that were sponsored by bipartisan groups of legislators in both the House and the Senate. And then also another two pieces of legislation in this last session that ended a few months ago. We were able to get those passed. This session was House Bill 591 and House Bill 1666, in case anybody is interested in nerding out on that kind of stuff.
Oh yeah, I'm sure we'll have a few people. We definitely have plenty of policy wonks who listen to this, and yeah, that's very exciting. So congratulations on getting those across the finish line.
Yeah, I appreciate it. Someone who is interested, they could go to the policy page on our website, texasblockchaincouncil.org, and really find a faster way to see all the policy that we've been working on, rather than me trying to describe it all in too much detail. But
yeah, sounds like a plan. So zooming out a little bit, just talking about let's say Bitcoin specifically. So, America, it's the land of freedom. It's founded on principles of freedom. Is there a moral imperative for something like Bitcoin to exist? Is this something that should be, a currency like gold or Bitcoin just in general? Is that something that's like a fundamental right, do you think, for Americans to have?
yeah, I think it is a function of the state for sure to have coinage and to defend that the monetary policy that we've enjoyed. It's certainly the dollar dominance ever since Bretton Woods. The fact that the dollar is a world reserve currency is a phenomenal advantage for us. I think it's known as the exorbitant privilege, if I remember my history correctly. And certainly Bitcoin is a unique asset in that it is divorced from state control. So fiat currency has actually only been around for about 50 years when Nixon took us off the gold standard. So prior to that, currencies were typically backed by hard assets like gold.
Yeah.
So we've got a very short amount of history of pure fiat currency. And of course, the dollar is the strongest fiat currency on the global scale, or on the global stage. But if you look at the history of money, fiat has typically been inflated away because it's impossible not to use that privilege as a state. If you're wanting to get more things done, provide more services to your citizens, how could you not utilize that ability to? And sometimes it's used for that. Back in the medieval times, kings usually used that privilege to inflate their currency to fight foreign wars. There's probably examples in the early 19th and 20th centuries where governments used that privilege more responsibly, and certainly times when governments used it irresponsibly. But it's just, regardless of how they used it, they're going to use it. And so inflation is sort of a natural byproduct of the current monetary system. And Bitcoin really is offering something different, right? It's not necessarily a competitor to the dollar. It is a different type of asset. And that's, I want to go back to the gold analogy, because, gold is very useful, but it's really not a good currency. You can buy gold, a REIT, or, a gold ETF, or fractionalized gold, or you can buy physical gold. But it's really not a good currency. It's not divisible. It's very poor unit of account. It doesn't move on the rails of the internet.
You're answering my question, I think, as we speak. But what makes a good currency?
Well, so there's a lot of things. There's these fundamental principles, right? That it has to be divisible. It's got to be a good store of value and unit account. It's got to be durable. It can't, degrade over time. And one of the things that I think, we will see Bitcoin evolve into is more so a payment system. But right now, it's not that. We don't use Bitcoin to purchase things at the store, and that's why
Sure.
it's a good complement to the dollar. Stable coins, that are stable, backed 1-to-1 with U.S. dollars, are a good thing in my opinion. People can use those, and they often do use those on the internet. You don't use those at your local gas station for sure, but you do use those oftentimes in internet or digital commerce. But Bitcoin is a store of value and an asset that can be a complement to people's just assets in general,
Yeah.
and will one day transition into more of a currency, but is not yet there. And so in this interim phase, I think the dollar, is obviously king, and we want it to remain that. But Bitcoin could come alongside it and do some interesting things. From a national security perspective, stable coins and Bitcoin will become more important as the years goes on, right? 5 years ago it was kind of a crackpot theory to think that they had any national security implications or relevance at all.
Sure.
And now we're seeing papers authored by Army generals, Army officers, national defense, professionals within the defense establishment and the security establishment in DC. They're really looking seriously at these assets.
And so how exactly would it be? Would it strengthen our national security?
So here's one example, and we'll take stable coins. This is stable coins. There are hundreds of billions of dollars worth of stable coins globally. So it's huge, and it's only growing.
Hmm.
98% of them are backed by US dollars. And when you get a stable coin, you say, I'm going to give 5,000 US dollars in return for 5,000 stable coins. And at any time I can mint and burn these stable coins. I can then turn those back in and retrieve my $5,000. So the stablecoin issuer keeps those in bank deposits and in treasury bills or some safe asset, right? They don't go off and invest that or rehypothecate it. They keep it in probably treasury bills mostly or bank deposits.
Okay.
And then you can do your commerce with those. And maybe someday you're like, all right, I want to go back into dollars. Even though a stablecoin is a dollar, it's not it's more so a representation of a digital dollar that's moving on internet rails. And so the more the more US dollars we have locked up in stablecoins, the more demand for dollars exists, and the more demand for dollars exists, the likelihood of the US dollar remaining the world reserve currency extends out into the future. So if there's a world where there's trillions of dollars of stable coins and they're all backed by US dollars and not by yen or yuan or euros, that's a plus for the United States. Plus,
Oh, wow.
it provides the US government quite a bit of visibility into transactions that is happening. So from a national security perspective, that's important. From a privacy perspective, we are personally against central bank digital currencies,
Yeah.
which are a Fed issued version of a stablecoin. What I'm talking about is private issued stablecoins by companies like PayPal or Circle or name your payments provider, right? These are they have some privacy protections built in, not as much as Bitcoin, but some. Whereas a central bank digital currency issued by the Fed is a very much a concerning thing for
Definitely.
us who believe in decentralization.
Definitely. There's a lot there. So I want to try to unpack a few of those things with you here. So really, that actually just kind of clicked for me, that what you were mentioning on the national security aspect. So essentially, it's almost like a hedge against our reckless use of the dollar and as a fiat currency, right? Our government's reckless, use of it, and eventually, people who study this and just throughout history, after a certain point, if we're talking about like debt cycles, long-term debt cycles, the country or the world reserve currency has always, been dethroned. And it's about that time, given how much debt the United States has and just, generally how long currencies have remained in that world reserve currency position. This is kind of based on some writing by Ray Dalio. Is where I'm.
I read that book. Yeah.
Yeah, fantastic book, Changing World
Excellent
Order.
book. Yep.
Yeah, highly recommend that book. But so am I understanding that correctly? So this could be a hedge against, again, the fiat currency and the debt cycles that we're going through right now.
That's right, Brian. And it actually expands to Bitcoin as well. So right now, Bitcoin's market cap is about 10% of what gold's is. Imagine if 5 years from now, Bitcoin has a comparable market cap to gold, right? It is very much very much a national security issue about how much gold any central bank or treasury, federal treasury has around the world for a country, right? So if the U.S. has more Bitcoin mining, has more Bitcoin, has more amongst the citizenry, but also amongst, in the federal coffers, that could become a national security imperative at some point in the future. Not to say that it is one now, but that's because Bitcoin is nascent and new and still, 1/10 the size, the market cap of gold.
Sure.
But things are changing rapidly.
Yeah, I mean it's fascinating stuff. And you're on the front lines, so I'm curious. The second piece to my question here is, so you had mentioned there's this talk of the Fed eventually having their own digital currency, and in turn that gives them the ability to look at everyone's transactions, right? Control. They could, in theory, they could say, hey, Lee, we don't really like what you're doing, so we're going to turn off your ability to do, to conduct transactions. Is that a realistic fear? And is that the route that you like? How realistic is that there is going to be that kind of push for something like that? Just generally speaking, from our government and across the globe.
Yeah, I mean, over 150 nations are actually studying central bank digital currencies, and a few have implemented them. So it is definitely realistic. The U.S. is studying it. There's a partnership between MIT and the Boston branch of the Fed. The U.S. is going to push for this. They're certainly going to push for it. And so I'll give you a couple examples of some concerning things around a central bank digital currency. So China has a digital yuan, and they have experimented with several different things. For one, they've issued money that expires. So maybe you have like a disaster or a hurricane or some sort of economic stimulus that you want to put out. You issue, digital yuan that expires after 30 days. And if you don't spend it, it goes away. You could impose a negative interest rate directly on someone's bank account. So Europe played around with negative interest rates in some of their bonds and things like that. But imagine if the government could impose on you a negative interest rate in your bank account because they had a direct Fed to consumer CBDC.
I mean, I don't think
and then, of course,
anybody likes the idea of this, right? It's the government probably loves it, but I don't know that any everyday American would be excited about that by any means.
Yeah, and the reason why we're so opposed to it is not because we distrust the Fed of 2023. It's because we think this is a slippery slope, and I'm not sure if I will trust the Fed in 2050. Yeah. I think it's power that could build on itself, and if I were one of the Fed board of governors, I would not want this to unleash this potential on a future administration that would have to make a decision about whether to, because as we see with governments throughout history, there's always rationalization that goes around utilizing these kinds of powers. So,
Sure.
we've given the federal government's power has grown throughout our history, and for good reasons and for bad. And just the current status of it's an extremely powerful, especially the executive agencies, they're extremely powerful. And just to allow, to politicize money in this way and to allow them this further power does seem concerning for a lot of freedom-loving Americans.
Yeah, absolutely. I mean, you look at something like the Patriot Act, for example, with after 9/11, looking into tapping the phones of just everyday Americans without any type of warrant or anything under the guise of, we're preventing future terrorist attacks. You could very easily see something like that happening that maybe did have a legitimate reason, right? With the future Fed, let's say the future Fed of 2050, maybe they have a legitimate reason to say, hey, we need to move to this central bank digital currency, and everybody, you could see that, you could see people getting on board with it if there's the right, crisis to lead it there.
Yep, absolutely.
Interesting stuff. So the other question I had specific to kind of, I suppose that to me it seems like a far off theory. Maybe it's not as far off as I might think, or the everyday American might think at this point. What's the flip side to that? Does Bitcoin have the possibility to ever become the new gold truly, where we had a currency, let's say a dollar backed by Bitcoin as it used to be with gold?
That is sort of far off right now, although one of the presidential candidates actually posited that idea and put forward that policy platform. RFK Jr. Is interested in backing dollars, a small percentage of dollars, with a basket of hard assets, including Bitcoin, gold, and other hard assets. And he included Bitcoin in there. So I thought that was interesting. But that's a fringe idea at this point. I don't think the dollar will never be able to be backed by any hard assets ever again. That it's just
Cat's out of the
money
bag.
supply, M2 money supply is too cat's out of the bag. It's too expansive. So what I would see happening is, again, sort of a complementary relationship between the dollar, which is going to be inflating between 2 and 10% annually for the rest of our lives, probably. Hopefully we never get above 10%, but it's possible.
Yeah.
And then, with the 2 to 4% range being not very concerning, but the 4 to 10% range being pretty concerning. So Bitcoin plays a scenario like gold in that conversation, but a much more versatile gold, gold that can be, transactions and value that can be settled within 10 minutes with minimal fees. I could send $1 million worth of Bitcoin, and the transaction would be settled and final within 10 minutes with just a few cents in fees, and I could send it anywhere in the world. The ability to transfer that kind of wealth with that ease is not currently available. ACHs take 3 days.
Yeah.
Wire transfers cost $30. That's just unreachable for most people that are sending everyday transactions.
Definitely. But you see.
Oh, and let me also comment, Brian, like the Venmo transactions. Everybody thinks, oh, we've got Venmo and PayPal and like all these it's great. It's super convenient. I use it in addition to using my credit card, and I even use Bitcoin and Lightning Wallet sometimes too. But on the back end, PayPal and Venmo are still they're clearing and netting out transactions and clearing those things in the traditional way through their banking service providers. So it's really not as seamless as people think it is.
Sure. But isn't crypto, does crypto not still require an exchange to do any type of transaction? To build on that, these exchanges obviously have not proven to be necessarily the most reliable thing. We had a lot of high profile, FTC and many others that kind of collapsed over the last year or so. So I mean, what is that not still a kind of a hurdle with transactions relative to Bitcoin or other cryptocurrencies?
Yeah, you're right to reference FTX, the exchange that
FTX.
imploded through fraud. Sam Bankman-Fried back in November. So a little bit of a misconception there that a lot of people have is that exchanges are required for transactions. Exchanges are just on-ramps. So exchanges are where people go to buy Bitcoin or to sell it back to dollars. It's sort of liquidity providers and liquidity platforms.
Sure.
We've certainly seen some spectacular failures there with FTX and a few others. And those are centralized exchanges. And, it was less about the blockchain technology that failed and more about like just greed and fraud.
Right.
And so House Bill 1666 was actually a bill that would require exchanges to provide proof of reserves attestations to the Texas Department of Banking on a quarterly basis. So we are very much taking the bull by the horns on that front. But Bitcoin and other cryptocurrencies are actually truly peer-to-peer. So once you have Bitcoin, now you typically would have to go to an exchange or a licensed broker-dealer to obtain it. But once you have it, it moves without exchanges, right? So I can send it from my digital wallet to your digital wallet without ever touching an exchange or really any other intermediary.
So the only requirement is a digital wallet that enables you to make these transactions.
Yeah, free wallet that you download on your phone. And if you're dealing with large amounts of Bitcoin or other cryptocurrencies like 5, 6, 7-figure amounts, you'd want to have a cold storage wallet where you're storing that off your phone in case there was maybe you lose your phone but you also lose your backup seed phrase for your wallet.
Right.
And then you can't access those and there's nobody to call to get those back. Right. So yeah, it is like a bearer asset in that way. Like if you lose $20 of cash, there's nobody to call to get that $20 back.
Right. And the scary thing is, I think there's probably a lot of people who listen to this right now who have forgotten what their password was for something at one point or another. So that is a little bit scary to think that it's, I'm forgetting one password away from losing whatever amount of money that I have, in my digital wallet.
Yeah, let me describe that a little bit further to kind of take some of the scariness out of it. So what you do when you go online and you download a digital wallet, right? Say you download the Coinbase wallet, right? Not the Coinbase Exchange app, but the Coinbase wallet, or like the Unstoppable wallet or Blue wallet or whatever you do. They will ask you to back up your wallet, right? So if you lose your phone, you can re-establish the wallet on a different phone. So not only do you have either a PIN code or a password or something like that, or Face ID to do it, you also have a piece of paper that has 12 or 24 words on it that, if entered in the proper order, will repopulate your wallet on a different device, on your new phone or on your iPad or what have you. So, I actually had to do that. I switched phones without thinking about it. I bought a new iPhone, and I had some digital wallets that I was like, I hadn't, backed up. And so I lost them temporarily for a few minutes until I looked at my seed phrases and then brought those wallets back on a new device. So it's really not as scary as people think. And if even that is concerning, there's actually what's called multi-sig, which it's multi-signature. You can go with a custodian, like a bank, if you will, or some other kind of trusted third party, where they hold one of the keys and you hold two of the keys. And if you lose one of your keys, you can still recreate that wallet with their third key. So you just need two of the three keys to do anything. So say you lose, a hardware wallet, or you lose some kind of access to one of those keys, this trusted third party can provide that. And by the way, they can't do anything with the funds because they only have one of the three. So with two of the three, you can move the money. Now that this is getting kind of complex, you'd only do that if you were using large, This was,
Sure.
you were storing large amounts of Bitcoin, but there are a lot of safeguards built in to make sure people don't lose their wallets. Really, people don't lose them anymore. You hear stories about 10 years ago, someone lost a hard drive with a bunch of Bitcoin on it. That is of the past, right? That there are user interfaces and ways, where the user interface is much more self explanatory and intuitive.
Yeah. Oh, and I say that in jest. Obviously, I was, no, it's definitely not that easy to get locked out of it. But that's interesting. I wasn't aware of some of those fail safes. And I mean, you think about it, even your bank, you've got fail safes built in. If you forget your password, lose your ID, lose your social security card. So definitely, really no different than anything else, right? In that sense.
Yeah, a
So
little different in the sense that like there's not a third party that you can count on to help you, which is kind of the beauty of it as well. It's like this is like it's a bare asset. I'm owning this. There are some things that I can do to back it up, but I can't go to some government entity to have them replace my keys here.
I want to talk a little bit about the stability piece. So that would be the concern, right? Is it's a storage of value right now, but a year and a half, 2 years ago, it was worth $70,000 for one Bitcoin. Now it's 30,000. And there's just been throughout the history of Bitcoin, there's just been, and other cryptocurrencies even more so, just these wild fluctuations. At what point do you see, is that a maturity thing? Do you see that stabilizing at any point in time? And is that something that you, with your efforts at the Texas Blockchain Council, are working with legislators to kind of help to address? Is that something that policy can make an impact on?
Bitcoin is a 24/7, 365 market. So whereas the stock market can be closed down if there's just a sort of a run on the bank, if you will, or a stock has high sell pressure, they can pause trading on something just so that things stabilize. Bitcoin doesn't have that. So it is a true free market in that the demand and the buyers and the sellers and supply and the demand really set the price. So there are going to be wide fluctuations in the price for years to come. While 10 years ago, we saw huge downturns of like 80%, and upswings of like 200, 300, 400%. As we get further along and price discovery has more time to, inculcate the market, I think those price swings are going to be with more recognizable bounds or more, the bounds are going to be more limited. So we might see a 20% drop or a 20% increase over a week's time or something like that. That's still extremely volatile. That's like, stock market volatility. I don't think we'll ever see Bitcoin get into like the bond level volatility. I mean, maybe a long time from now, but I think, we'll move from sort of penny stock level volatility where Bitcoin is now to like Tesla and Apple level volatility a few years from now. And then eventually Bitcoin will probably be less volatile than those stocks. But it does take many, many years for a new asset like this to really have price discovery. I mean, gold experienced decades and centuries really of price discovery.
Sure.
And now I feel like as an asset, there's pretty amazing price discovery on gold. And it's simply the price is kind of moves with consumer sentiment around inflation and around, gold supply as its key, it's a hedge against inflation. So long story short, smaller swings, but yeah, that is a part of it right now.
So how do you encourage through your efforts? How do you continue to encourage Texas to kind of get with the program in terms of our legislators? How can you create an environment that fosters innovation in cryptocurrency, but also do some of those things? Really love what you mentioned there about FTX and kind of what your efforts were able to generate in terms of like the protection there. How do you balance those two things in terms of those sorts of efforts, regulation, to kind of make sure that we don't have any bad actors or less opportunity for them to, do what humans do and get greedy, and then also create an environment where we can continue to be kind of like a leader or become a leader in the blockchain and crypto world?
Yeah, you're right. It is a balance, right? We don't want to see innovators, and capital go overseas, but we also don't want to create a playing field where grifters and fraudsters can take advantage of people. So I think the current market structure bill that the Financial Services Committee in the U.S. House has just put forward is a really great start. It allows for crypto assets to initially be regulated by the SEC, and then if they become sufficiently decentralized, like Bitcoin and Ethereum, could then shift over to be commodities and regulated differently. And so the Texas delegation supporting that legislation, I think, is very important. At the state level, we, in the 87th session, worked on House Bill 4474, which amended the Uniform Commercial Code, which is like business law, to state that you can perfect your security interests in digital assets and virtual currencies like Bitcoin through possession of the cryptographic keys. So created some clarity around perfecting security interests and lending, and using these assets as collateral. And we need to continue to do things like that, continue to ensure that there is a regulatory framework for builders to build, but one that's not so onerous that people are moving and establishing their businesses out of the Bahamas or Liechtenstein or Singapore.
Interesting. So then the regulation, I mean, that provides some degree of guardrails for people to want to invest in these technologies and get more involved in them is kind of what I'm taking away from that.
That's absolutely correct. Yeah, the more regulated the industry is, the more institutional investors will be interested in participating. There is a lot of garbage that has to get flushed out of the system. There's over 10,000 crypto projects and cryptocurrency tokens, right? Cryptos, and 95% of them will end up going to zero and be worthless, right? And the 5% that make it will, and I actually don't include Bitcoin in those, right? Bitcoin is an asset that is clearly head and shoulders beyond, different and beyond what the other crypto assets are, right? So
Yeah.
Bitcoin is trying to be money, whereas the other assets like Ethereum and Solana and Avalanche and some of these others that you may have heard of are really trying to solve a business problem through a smart contract, Turing complete blockchain, right? So
Sure.
they are a different animal altogether, and only a few of those will survive, right? They will be layer one platforms for the implementation of decentralized applications that are built on top of them. So that's really the Web3 word that you hear bandied about. That word is so broad that it almost means everything and nothing all at the same time.
Yeah.
But there will only be a few of those that actually survive, and that's probably a good thing. So, investing in crypto is sort of a speculative venture right now, whereas in my opinion, investing in Bitcoin is more like investing in gold. You're not going to see crazy returns, but you're also not going to see it go to zero.
Yeah. Interesting.
And you might see pretty sizable returns relative to like the risk, the asymmetric risk return profile for Bitcoin looks pretty good if you look at, and don't take my word for it because I'm not a financial advisor,
Yeah.
and none of this is financial advice.
Have to say
But
that.
if you look at Fidelity's report on Bitcoin, or BlackRock, they have some pretty compelling information, and they are financial professionals, so they have it written out with some pretty clear thoughts there.
Interesting. So
Yeah, and I guess I don't want. Oh, go ahead.
Oh, please just finish your thought.
I was going to say I don't want to discourage people that are more interested in some of the other platforms like Ethereum and Avalanche and Chainlink, etc. There's a lot of engineers and developers building on those platforms, and they're creating some really great decentralized applications and use cases. And most stablecoins are built on Ethereum or other smart contract platforms. So a lot of innovation happening there. It's just apples and oranges to Bitcoin, right?
Totally. I mean, it's just a different use case, right? Ultimately, it's Bitcoin, as you mentioned, it's positioning itself to be has positioned itself to be a current or something like gold, a currency like gold. And then we have these others that are more business applications, transactions, and building various applications on the blockchain. So just like you said, apples to oranges, different use cases entirely, right?
Yeah, and if you want to throw carrots in the mix, so we've got apples and oranges.
Let's do it.
You want to throw carrots in, that's like enterprise blockchain, so private permission blockchains. Those are things like IBM Hyperledger and Tacit and other blockchains of that nature. So probably a whole nother conversation for another day.
Yeah, we won't get too deep on that, but maybe we can talk about it at some point in time. I wanted to ask you
another thing that's interesting.
Go ahead.
Go ahead.
Okay, I'll go ahead and ask this because I think this is something that's coming up. Hold that thought. I want to get what you were about to say there. But what is going on with the Bitcoin halving? So every 4 years, what can you explain that in layman's terms to everybody listening and to me, really?
Yeah. So every 210,000 blocks, I believe, is the number. The Bitcoin blockchain is programmed to have the number of Bitcoin that are issued as a mining reward every 10 minutes. So a new block is formed every 10 minutes, and there's a mining reward that is given out to the miner that solves that block. And currently today it's 6.25 Bitcoin.
Okay.
And so here in about 6 months, in April, I guess that's a little bit more, that's 9 months away. In April of 2024, that 6.25 will be programmatically halved to 3.175. So you'll see the issuance slow down. And so instead of about 900 new Bitcoin a day, it'll be 450 Bitcoin a day that are issued in mining rewards. And eventually there will only ever be 21 million Bitcoin. So eventually there will be no more mining, right? Well, let me rephrase. There will be no more block subsidy. There will still be mining because the miners also get transaction fees as a portion of their block reward. Right now, it's just a very small percentage of it.
Fascinating. And that's a good segue into just mining in general, I think. So to summarize what you just said there, so essentially the halving means the reward that somebody gets for mining for Bitcoin, which is a fairly labor-intensive process from what I understand. I don't understand it terribly well. Would love to hear a little more about that. Is that am I understanding you correctly on that? So basically the incentive to mine Bitcoin is reduced every 4 years, and that's what is ultimately going to happen here soon? That's
correct. Yep.
Okay. Interesting.
And mining is interesting for Texas. At some point in a future conversation, we should talk about blockchain for voting too, because that's of interest perhaps in the political arena, and perhaps also of interest for people that support ranked choice voting, which I know is a big platform for the Forward Party.
Well, let's talk about that now. I mean, this is the place to do it, and that's probably the most pressing thing we could talk about relative to blockchain on this podcast. So what are the use cases there, and is that something that's being discussed at any level?
I don't think it's not a good fit for. Well, I'll say this: I don't know if we'll ever see it in Texas, but it is being used across the world in several countries, especially in Eastern Europe, where they're very afraid of Russian tampering in their elections.
Yeah.
So the ability to confidentially cast a vote and then to use your private key to verify that your vote was cast for the person that you intended to cast it for is a pretty powerful thing.
No kidding.
It's kind of it's a very politically delicate. Elections are very politically delicate, and so I just don't see it in the near term being adopted by the Texas Secretary of State, given the fact that uh, we really have to ensure that trust in elections increases. And even though this would be bringing more trust, it would also be implementing some sort of change that people don't really understand as much.
Yeah.
So I'm not sure how long it will take, but eventually I think voting will move that direction, but needs to be a long process and a lot of education that happens between now and then.
Yeah. There's just probably not enough comfort in the technology at this point, just across the general population, in especially with lawmakers for something like that to, it's too there's too much like unknown, right, to the everyday person for something like that to seriously catch on probably at this point.
Much too early. And we want to study how it works in other countries too, like Estonia and Latvia, places like that.
So who's the furthest along then? So Estonia and Latvia have implemented this? Or
Yes,
they're talking
sometimes
more seriously about it?
right. Sometimes I get mixed up in my Baltic states geography, but I believe Estonia is the furthest along on this front, and they've been doing elections with blockchain for quite a while.
Wow. Well, that's pretty significant that that's even happening anywhere. I mean, that says a lot about, the confidence, and, that says a lot about just that as a potential option.
Yeah, it'll be interesting to see as more countries adopt it. I think we'll need to let some time pass and we regain some trust in our elections before we try to change anything else.
Sure. But I mean, it's like that would help to regain trust in the elections, though, right? That's probably one of the easier use cases, in my opinion, to explain is, you can make sure who you voted for was who the vote was cast for. I mean, what a hot topic on both sides of the aisle. I mean, confidence in election integrity is very low in a lot of circles in this country. So, I mean, could be a good solution, but
Fraught with risk and pitfalls for sure, as far as politically.
yeah. So,
one of the
go ahead. I took over last time. It's your turn.
we keep doing this to each other. One of the things that I wanted to also mention on the Bitcoin mining front that might be of interest to Texans is, you hear a lot about Bitcoin mining in Texas and how it's using power.
Yes.
I think I heard one of your podcasts. You had an energy professional on recently who I think understood and gave the listeners a good take on the nuances of power generation in Texas. But a couple of things that I hope to set the record straight on as we do a lot of work with ERCOT on electricity. Bitcoin miners certainly do use a lot of power, but they use it in locations and during times of day when that power wouldn't otherwise make it to a viable end user, right? So we have a lot of stranded power in Texas. In West Texas, you could have double the amount of power generated than that we have transmission capacity to get to the big population centers of the state.
Sure.
And so an electron of electricity generated at midnight in West Texas is far different than an electron in a transmission line in Dallas, Texas at 4 p.m. on an August day, right? So how and where this electricity is used is very important. And Bitcoin miners are naturally incentivized to use electricity in places that are far flung away from population centers. And if need be, use it at times of day when, when other people aren't using it. So oftentimes they'll turn off for a couple hours in the afternoon when demand is really high. So it's really not about aggregate energy use. It's about, do you add to peak demand? Are you
Yeah.
adding to, that 4, 5, 6 p.m., 7 p.m. usage with the duck curve? And people in Texas, a lot of them will be familiar with the duck curve. So Bitcoin
Sure.
miners are able to compress the duck curve by using energy in those low demand times and turning off during the high demand times. And with all that said, I can safely now tell you that 3% plus or minus of all power generated in Texas is being used by Bitcoin miners. And so that's kind of a scary number unless you realize they are sort of like a demand side battery. They are a better way. ERCOT would prefer me to describe it more so as a capacitor, something that can ebb and flow, a flexible load, if you will, that can give that power back to the grid when it's needed, but be using that power when it's there and help to support our generators, especially natural gas generators that are needing to have buyers for electricity overnight, or else they can go bankrupt.
Yeah.
And then you also have the benefit for renewable generators when you co-locate with a wind farm or a solar farm out in West Texas. If they are getting curtailed, like if your wind farm is generating 100 megawatts of electricity, but you only have 50 megawatts worth of transmission, you're actually having to ground out half that power. So if you have a Bitcoin miner there that's able to take that power, you're actually more economical and you're able to build out more renewable generation. So it's a very nuanced and complicated thing, but
Yeah.
as people look into it further, I think they'll realize it's actually a really good thing for grid stability and energy generation in Texas.
How does it, and I want to just, I know we got to wrap up here in just a minute, but how does it add to grid stability? Could you expand on that? So to me, it sounds like it makes sense, the fact that we're wasting a lot of energy, and especially these rural areas where it just can't be used, and it's not being used, it's waste. And Bitcoin miners are taking advantage of that. That makes sense. That's great. But how would it add to grid stability just in general?
Sure. So two ways. One is through ancillary services, otherwise, like in layman's words, demand response. And the other one is frequency response. So demand response is, Bitcoin miners being curtailed by ERCOT when the grid, prices rise past a certain point, right? So if the grid gets into a little bit of stress, the price of power will rise and the Bitcoin miners will turn off, either because they are doing that because of their own self-interest, because they don't want to pay high prices for power. And that's at about 10 cents a kilowatt hour is their break even. If the wholesale price gets above that, then they'll turn off. Or it's because they've entered into these demand response relationships with ERCOT, and ERCOT is curtailing them at those times. So you don't have to just count on their goodwill. They're actually doing it for price reasons and for business reasons. The other is frequency response. So ERCOT uses Bitcoin miners to modulate the frequency. If the frequency of the grid gets below 60 hertz, or if there's a need for some frequency response, then Bitcoin miners are the most flexible load and the fastest responding load. So they're oftentimes helping create that proper grid frequency, so our transmission lines aren't getting damaged by too high or too low of frequency.
Oh, wow. Well, yeah, that's fascinating, actually. Good stuff.
Yeah, if people want to hear it from somebody other than me, which I wouldn't blame them if they did, because I am a mouthpiece for the industry and I'm biased. Go listen to Brad Jones, the former ERCOT CEO. He's got a lot of conversations out there, both on CNBC and speaking at our summit and in written form on the internet. If you just look up Brad Jones Bitcoin mining remarks, he's a former CEO of ERCOT, and he can provide validation to what I'm describing.
Yeah, it seems like such an unlikely partnership, without having, talked to you today about that and really dug into that. ERCOT and the Bitcoin miners. Who would have thought?
it's a tool in their tool belt, and
Yeah.
it's somewhat counterintuitive, but interesting for us to kind of wrap up on a topic that's highly complex. But glad that we got to talk about it.
Absolutely. And really glad we got to have this conversation, Lee. It was super interesting. I certainly learned a lot, and hopefully the listeners at home did too. And do you have anything you want to plug? I know you've got an event coming up here in a few months. Anything else you want to mention before we wrap up?
Yeah, we have the Texas Blockchain Summit in Fort Worth. That's November 15th, 16th, and 17th. We're going to be extending an offer to the Forward Party podcast to join us there if you guys can make it. We've had Andrew Yang there at the summit for the last couple of years. He'll come again. I know he's a great voice in the Forward Party, and we've appreciated his leadership, both on the digital assets front, and also on the his thoughts on ranked choice voting and nonpartisan primaries. So we'll have other elected officials from across the state and across the country there, and we look forward to engaging in those conversations with your audience too.
Absolutely. Well, I look forward to it. We look forward to it. And thanks again, Lee. We'll let you go. Let you get on with the rest of your evening.
Thanks for having me, Brian.
And thank you, everybody, for listening. As always, we want to hear from you on our conversation today with Lee. What did you think? Who would you like to see us talk to? What topics do you want to hear us cover? And thanks again for listening. Good night, everybody.